Hey, welcome everybody. If you tuned in just a little bit late, I forgot to hit the start recording button, so we're starting over again. This is Dennis Wilburn with the Active Trend Traders. Welcome to the Making Money Trading Stocks and ETFs for June 8th, 2018. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. Here's a little bit about who I am. I really believe that, one of my objectives that I have tried to remain true to when I started doing active trend trading about 12 years ago is to help, to continue to clarify, simplify, so that members can multiply what's going on in their accounts. We continue on that on that path of clarifying and simplifying, and we've got some things coming up with active trend traders trading, and a couple of the other features that we do offer with active trend trading that is going to continue to simplify the process for everybody. I like this quote. This is from Stephen Burns, but I modified it just a little bit. And so I basically said it's now from the Active Trend Trader. So most trading errors come from a lack of patience and a compulsion to do something, even when nothing really needs to be done. If you've traded for any time whatsoever, you have gotten yourself into a situation like this where you just sense that, oh man, I've got to do something. I've got to be in a trade. I've got to. And typically when you sense that you've got to do something is the best time to sit on your hands, maybe wear work gloves or something so you can't operate your mouse and not make any orders. The objective of this webinar is to, one, do quickly a timely, actionable intel report at the end of each week. Normally, this goes together with the webinar that we do on Mondays called After Market Mondays, where we kind of set up, see if there's anything setting up for the week for members. And then, so we do a real quick market review. Right now, markets are, I guess, somewhat mixed to just, they just can't figure out what they want to specifically do. What's really funny, we may catch a bid into the end of the day, which, hey, that's fine. But what's really interesting is it seems as if, okay, we're having the G7 meeting up in Canada this week. We're fighting with with a lot of our allies on the G7 meeting and all that kind of stuff. I hope you're keeping up with what's going on there. It's kind of interesting. And it's just not one country trying to pick a fight with another, but there's some legitimate issues from a business standpoint that maybe need to be negotiated out. So the market may be just sitting on its hands going into this weekend saying, okay, what's going to come out of this on the other side? If it's good news or if the tariffs appear as if they're not going to be as significant as they were thought to be, then we may go into hit rally mode going into next week. Do we want to take action right now just in case? Oh gosh, that's a toss-up kind of question. One could, if they wanted to, go out a couple of 2-3 weeks and buy some calls and or put or just do a straddle as a thought for playing this weekend. Because come Monday, regardless of the news, there's probably going to be a reaction. The markets have been very reactive over the last little bit. So let's go on to, hey, here's where we're sitting as of close at 9 o'clock this morning. We're up about 15.5%. My target, I want to get as close to 20% as by the end of June as I possibly can, because our target for the year is to hit 40% or better with the 3 strategies that we work with in the active trend trading system. As you can see, NASDAQ Composite, and Russell outperforming the slower moving Dow and the S&P. NASDAQ took a whack yesterday, of course, primarily due to issues with Facebook again, regarding something, selling data to China or something like that. No, I know that's exactly what it was. And so, yeah, their data, let's face it, guys. I mean, Facebook uses their information, their data, and lets companies pay them to data mine. You ever wonder how it is that when you log onto your computer and go to the internet, the ads that show up are a lot of times ads that either the reason why I never use Facebook, but even on your web pages, or if you go to a landing page to begin with, it seems like the ads are targeted specifically for you, either from your gender to your age group to a lot of other things. And so I think it's kind of funny, kind of interesting. They know us, they know who we are. So we'll get over to the charts here shortly. Here's where we're sitting as of the 3 different strategies we're going to be working on, or that we are working on. And here, of course, is for premium members, is the go, no-go table. If you're not a premium member, you do not get access to this on a weekly basis. But what we highlight here and what we call out is what we're trading, what we're interested in trading. We keep a very compact watch list. And then on the go, no table, we explain exactly where we want to get in or where we don't want to get in, if there are, in fact, specific areas of interest. And I think I highlighted down here BABA. BABA broke out above 206, and we explained that last week, and looking for a pullback into there. This was a great strategy that we utilized, wait till for strategy 3 to sell puts against BABA if we get a pullback. The other one I want to highlight to folks that I just really, really liked. One of the things is, yes, we do send out trading alerts, for the week, but at the same time, this go, no go table provides folks with the ability to take a look at what is said. Week before last on LABU, I highlighted and said bounce, it was basically highlighted support area 85, and it bounced specifically right at 85 or around 85, which would have given somebody, if they were doing their homework and looking at what was prepared for them, the opportunity to get into a trade at 85. And I think that the LABU actually went up to about 105 to 110 this past week. And so all that within just a week. And so that's some of the benefits of the go, no-go table. Okay. We are in a bonus trade, and this is offered to everybody in JNUG. And at the premium final hour, we're talking about the orders that we did send out today. We were filled on a couple of them for strategy 1 and also some of our strategy 3 positions. I want to thank Eric Golub for introducing us to GUSH and DRIP. We actually got into a position on GUSH today. I just love those acronyms for what they mean. They crack me up. Anyway, here's the strong stocks that we are looking at, along with our index ETFs. Still, we're very news driven in the market, not a sign of a real healthy market. Strategy 2, we have been doing well in strategy 2. We'll be, pulling in and doing more with that throughout the end of the year, targeting somewhere between $500 to $1,000 per week. Right now, I'm averaging about $348 in the Thinkorswim account. So gold seasonality, I want to bring that to everybody's attention. This is one of the reasons why we are in the gold trade. We're approaching that time of year where gold tends to get a bid, and it's off to the races. We're almost in the midsection of June, so we could get a little pullback or just sideways movement, and then tends to around middle of July get a bounce. How else could we play gold? Well, right now we're playing the miners with JNUG, JNUG. One could also look at trading GLD, either buying GLD straight out or the options on GLD. I would be going out to approximately September. There are either a monthly option available in September or a quarterly option. Either of those, buying a close to at the money, anticipating a move up that would incorporate this move. And so that's another way to trade the anticipated seasonal move on gold. Want to highlight NASDAQ, something similar, tends to coast higher in the summertime, but then we want to really be paying attention to NASDAQ around the September-October timeframe, where it tends to get its year-end boost. Same thing on the Russell. So let's go back and look at some charts and a couple of, make sure that we're staying within our limits. I've got about 3 minutes to go before we call it a day. Let's take a look at, okay, weekly, daily. Here's the SPYs. Okay, spiders, weekly. It's still in this congestion area. Really hasn't rebroken out to the top side, although it's doing some constructive work. The moving averages on the daily charts have all started to swing up. TSI took a bounce towards the end of last week. I think 31st, that was Thursday of last week, right off the zero line and started up. And then, and that was following a bounce off the 100 day, 50-day, bounce on up and has moved and has run on up. Where is the SPY likely to go? Well, one of the ways we can do is just lay in a fib extension on here, and then we go to there, back to there, then it extends up, and as we okay. I don't know if you guys can hear that going off in my ear or not. Oh, thank you, Troy. Troy says install uBlock Origin and Ghostery plugins inside Notes, Chrome or Firefox to block Facebook beacons, and all advertising in your web browsing experience will be vastly improved. So just want to basically just go ahead and highlight. If we're looking at symmetry in the move, well, then we're expecting a move back up to at least the 100% line up here, which is about 282. Well, as you can see, we hit 282 earlier in the year, and so that appears as if it's going to be a target range. If we bust through the 282.91 area, then the 1618 is the likely point the S&P is going to continue to move towards. So we're getting, like I said, some nice moves up weekly, coming after the midsection of the TSI, pointing up. So that's what we've got going for the S&P. The question I have about the S&P is, okay, is it going to hold below 278 into next week? We'll have to take we'll be checking that out on the premium time frame. QQQ. Okay, QQ has lifted itself back up on a weekly basis towards the past highs. Same thing over here on a daily basis. We are bouncing off of the the 8-day moving average here on the Qs. And you got to remember, today was an absolutely ugly beginning to the market. I woke up very early this morning. I don't know what it was. It was just kind of like a sixth sense. Go check the futures. And oh my goodness gracious, the futures, for this morning for NQ were just, it was ugly. I can call that up right here. As you can see, it was all the way down to 7,100. It was it was close to, off over 100 points from yesterday. TSI has broken back down, but look what's happening. We are pushing up higher. So for what we've got right now, all it did was a nice little one-day retraction or setup, pullback into the 8-day moving average, and it is now rebounding. If we move on up, if it gets good news, it's probably going to blow out the top here at 72.44, which would equate to the Qs, back up to the Qs, blowing out the top of this section here. Again, this is another place where you might want to nibble a little bit. TQQQ. It wouldn't be a bad idea to just basically say, I'm gonna buy a half or a quarter of position. We're bouncing off the 8. I can take a quarter of a position or a half a position. My stop is going to be immediately below the 8-day. Okay, if it takes out this low, the low of the low day, then I want to be out of the trade, and I'll wait for another setup, because if we get good news out of Friday's or out of this weekend's meetings, TQQ could gap up above 62 and be off to the races from there. IWM has been doing really well. As you can see, IWM hasn't been basically impacted much at all with what's been going on with the other markets. It started its rally back around 29th of May, has run up nicely over the last week. And again, we're getting a little bit of negative divergence that may pull things back, but for right now, all we can look forward to is trading the pullbacks, and the pullbacks may be extremely light. A couple of other, and I will throw these out. JNUG, JNUG. Okay, as we see, we've got JNUG kind of, it's got a little, oops. We've got a stop on our current position down here about 1340. It actually came down and tried to take that out on the 29th, last Wednesday. The spring is tightening, and once it does fire, then we should get a nice breakout above the moving averages. And if JNUG, where might JNUG go? Well, if we take a look at past September, July, September, what did it do last year? Well, last year it jumped off from here, first part of July, and it ran a good 72%. Now, I'm not going to say it's going to run that far this year, but if we go up 72% from here, where will that be? That'll put us up above 21. And so it'll be a nice move. What I'm looking for right now as we get closer to when we typically get the move in gold in the June, July timeframe, I'll be looking, since I only have a half a position right now, I'll be looking to add to that position. And the last thing I'm going to leave you with is Adobe. Oops, not Adobe 4. Sorry. Adobe has earnings coming up on the 14th, which is next Thursday after market closes. If I get a retest down here on the 8-day moving average, I might look at buying a at the money to slightly in the money call, anticipating a move into a move into earnings, and also implied volatility increase and going up. So, okay, my friends, that's what we've got today. If you are a premium member, we'll be back at the top of the hour with something. No, we'll be back at the top of the hour with the final hour. So remember, hey, keep the 8 growing. If you're not a premium member yet, just be on the lookout, because you may be seeing some good deals coming down towards the end of the month if you want to give the premium membership a try. So just remember, 2018 continues to be a year of breakthrough and restoration. It's not Memorial Day this weekend, but aloha, trade well, and prosper. We'll talk to you later, everybody. Good day. God bless.